Welcome, California homeowners, future buyers, investors, and curious minds. Today, we're going to talk about California real estate, the national economy, and how all this impacts our housing market forecast. As we sift through a plethora of data, dissect expert opinions, and unveil market trends, we'll attempt to sketch a roadmap of what lies ahead. Whether you're looking to sell and make a move, buy your first home, invest in a promising property, or simply keen on understanding the economic ripples, you've tuned into the right channel. We'll look at broader macroeconomic trends for the year to come, examine some of the challenges facing the real estate market, and finally, talk about what opportunities lie ahead for buyers and sellers. Let's dive in. First, let's look at the national economy. Now, we've seen notable job growth recently, with September's numbers up significantly over the past few months. However, even with that growth, the labor market might not be as strong as it seems. When looking at California's total employment growth, we see that it's hovering at about just 2% recently. We're in a more moderate economy right now. After the strong rebound after the pandemic, things have started to cool off. However, it's worth noting that none of that really matters because what's driving these high mortgage rates is the Federal Reserve. And according to them, job growth has been too strong as of late, meaning that rates will need to stay high in order to continue to curb inflation and a recession. Inflation, by the way, is actually down quite a bit from its peak during last year. According to these four indicators, we see that in May of last year, numbers were as high as 10%, and now they're hovering near 4%. That improvement is a good sign of things to come as we anticipate the moves of the Fed in the year to come. If inflation hits their target of 2%, we can expect them to lower rates accordingly. Now that change will come with time and patience, likely not until the end of next year, if current trends stay the same. Additionally, when we look at the bond yield curve historically, when the yield goes negative, meaning that people will lose money on those bonds, that trend seems to always precede a recession. We have had a negative yield for over a year now, but the yield is starting to climb back up. Again, indicating a positive future for our economy in the year ahead. One other notable economic risk ahead for the buyers out there to know about is getting insurance. It's becoming a little more difficult to secure buyer and homeowners insurance here in California lately. A report by the California Association of Realtors shows that 17% of buyers had some difficulty obtaining insurance. That number was also as high as 32% or 24% in some sectors. This past year, some of our own buyers have had some difficulty, but we've been able to come up with some great solutions. So knowing all that, what do you need to know? First, it's always a good time to buy in California. The reason being that when you look at our population and job growth here in the state, you can see that we have an influx of people wanting to live and work here. But the rate of new home construction simply cannot keep up, meaning that there will almost always be significant growth in home equity over time due to shortage of supply. If you have the means to, you should try to get into a home as soon as you can so you can start building that equity too. When you look at a household net worth, the difference between homeowners and renters could not be more stark, with renters having only about $1,000 more today than they did in 1995, whereas homeowners are up nearly double at $400,000 in net worth. But if you're waiting around hoping for a crash so you can buy a foreclosed home, remember, 93% of homeowners in California have a current mortgage rate of 6% or less. Risks of a housing crash here are very, very low. Homeowners are holding onto their homes for longer than ever because of low rates, low property taxes, impending capital gains taxes, and not having a place to go if they did leave. Mortgage delinquency is also at almost half the historical average, meaning people are making their payments on time and are showing no signs of foreclosing. However, for those who do want to sell their home, you're in a great position to take advantage of the lack of supply in your zip code. Current median days on market are at just 19 days. That number is slowly going up from the lows of the last few years. You'll still have to do a few open houses to get the best price on your home, but if you do things right, you can still get a record price. Median home prices here have been on steady incline since 2009, with truly no signs of stopping. Again, this is a reminder that for those waiting on the sidelines, Rates are still high with no significant drops in sight for the year to come. All the while, the prices of homes just keep going up. The longer you wait to get into the game, the pricier it'll be when you finally do. Just like the old adage says, time in the market always beats timing the market. So what does 2024 look like as we anticipate the market trends we're seeing take shape? Well, according to the California Association of Realtors, things are looking up. They predict a 22% increase in total resales of single-family residences and a modest 6.2% increase in median home prices. So, diving into the heart of the matter, what does this all mean for me, Monica? Well, the real estate market's pulse affects everyone, whether you're buying, selling, or just observing from the sidelines here in SoCal. Being well-informed is your key to making smart decisions in this dynamic landscape. As your OC real estate expert, I'm here to provide the insights you need to navigate the market confidently. The unfolding trends of 2024 carry both challenges and opportunities. And while the market ebbs and flows, solid advice and timely action can make all the difference. So if you have questions or you just need some personalized guidance, don't hesitate to reach out. Hit the subscribe button for more market insights and feel free to call me to discuss your real estate goals. Together, let's make the most of what the market has to offer. Thanks for watching, and remember to join the conversation in the comments and send this video to someone who you think needs to see it. Until next time.